Hello, hi.
Nice to meet you.
I don't know. Oh, you're a speaker. Do you want to tell me? Or? Well,
Yeah, definitely.
Yeah. You're not just. Guys, in a few minutes. Yeah, if you want to lapel me, you'd be walking around, standing here. Yeah, is that all right? I'll help you. It'll make it sound.
Thanks, and I hope you receive the document.
And if you want to put this in your pocket or something, or on your belt.
So, Francis, professor here. So I'm only here because students need to have a faculty member to chair the session, but I'm planning to let you run the show. Is that okay?
Of course, absolutely.
Yeah, okay.
Yeah, if
What would you like me to say to introduce you?
Thank you.
Okay. So yeah, Albert. Yeah. Okay. So I have something about you, but are the things you want me to particularly stress about?
I don't know what's in there.
So career, PwC Moscow office, Russian branch of JP Morgan, then Goldman. What are the things you really want me to say?
I mean, I can just say all of this myself.
Okay.
Yeah.
Okay. Perfect.
Yeah. You,
I just say one and then
what do you teach?
macroeconomics, first year. That's why I must have received like 10 different invitations to share one of these.
Because it was so hard for because it's like LSE like rules to be sure like that the freedom of speech is just in order. So
Is enforced.
yeah, so it's like enforced.
Every couple of hours, so we get a request to share one of these.
Hello, Greg.
You can just say that next speaker is Albert Seguir, and he can introduce himself. Interesting days, huh? For Mac.
Amazing.
Huh?
Well, actually, it's been like that for 10 years. 10 years of interesting days for macro. Everything's a roller coaster. Financial crisis, sovereign debt crisis, QE, negative interest rates. It's been a roller coaster.
Definitely changing.
So you want to tell us when you want us to start, or?
Yeah,
I think in a couple of months.
Where are you based now?
In Moscow. I travel to London often, but mostly Moscow.
Didn't shoot up the bucket, right?
There's like 5 cases.
Oh, you have
4 or 5 cases. I mean, 2 came from China and 2 came from Italy. You're Italian, right?
Yeah. I haven't been in Italy for more than a month. So, actually, no, since Christmas. So almost
2.5 months.
2.5 months. So I should be clean.
Because you know how much Russians love Italy.
Yeah, I know.
So they all go there, they
Yeah.
come back, and
Last time I was there, I went skiing.
where did you go?
Cervinia. And that was the first time I really noticed quite a few Russians skiing.
That's Dolomite.
No, that is in northwest. It's Val d'Aoste, which is all the way towards France. So northwest. Dolomites also is becoming popular, I think.
I've been to Cortina
Oh, yeah.
2 or 3 times with my family for the 2 years.
Yeah.
Did the Stella Ronda.
Oh, beautiful. Yeah, we've been there a few times, but this is a bit like so.
So yes, people go, a lot of Russians go to Italy, and they come back, they have to stay in quarantine for 2 weeks.
Everybody who's been used to be quarantine.
Now, Italy and, well, China, obviously, Italy, because Italy has the most cases.
What's amazing is the differences in response. Here, unless your symptoms coming from Italy, and there's no restriction.
I think they will, because there's been 2 cases of people, employees of Heathrow getting sick.
Yeah, you're usually sick. So if you're sick, you get sick.
The other thing in Italy, what happened was they changed the way they measure. So when they changed it, I really hope this thing gets contained somehow, or people start to realize that it's actually not that.
The only reason is that we have peak that fills the hospitals and creates high occupancy. I like all the ways which are just they're accepting there are cases, but they want to try to spread them as much as possible over time. That's the problem.
The market for the students is buoyant, meaning they can find a job quite easily, right?
Yeah. For now, absolutely, yeah. There is a little bit of uncertainty about Brexit and final shape of things. Now, this is a very hot labor market at all levels of skills. LSE students do very well. Too well. They tend to be very finance. It's not finance consulting.
So the paradigm didn't change. It's still.
I thought it would, but at least in terms of students, I don't see much of a change.
That's what I figured by speaking to this guy David. They all want to be bankers, and then they all want to go into private equity funds.
Yeah. If you want to do accounting or consulting, vast majority pre-crisis.
I speak fairly often, and in Russia as well, people still think, Goldman Sachs, investment banking.
Then I speak to people who are in the industry and tell me, look, it's nothing like it used to be.
They still read the books. They still watch the movies.
Tell them, they need to hear it.
The romance of the thing is not there anymore. As you know, before it was encouraged to take risk, so that people could make money. Now it's completely the opposite. All the OTC products moved to the regulated exchanges. And in Russia, before was so many banks hiring people, but now all the international banks retrenched. There's basically no hiring. So maybe 3-4 analysts per year get a job at bulge brackets banks. Да, ты так делаешь? Да.
Right, ladies and gentlemen, we are about to start our next talk on international finance by Mr. Albert Segeran, and it's going to be chaired by Professor in Macroeconomics, Professor Francesco Caselli. Please, over to you.
You already said it. I'm here to chair. Albert is here to speak, so let Albert speak.
Thank you. Thank you very much. Hello, everyone. Can everyone see me? I don't know whether I should stay here or probably here. Is this thing on? It's kind of difficult because I don't know which way to look. So if I'm looking this way, please don't feel like I'm ignoring you, and the other way around as well. My name is Albert Seguir, and I'm super excited to be here at the London School of Economics. So many beautiful faces, all aspiring to be finance professionals. Today I'm going to speak a little bit about myself, but the most important and the reason why I'm here is to make sure that I answer as many questions as you guys have, because clearly you all are here, trying to figure out what to do next with your life. How does life after higher education look? What's waiting for you guys out there after you leave LSE? I see some familiar faces. So let me start. My name is Albert Seguir. First of all, how many of you know something about me, maybe read somewhere or looked it up before today's? So I know to which extent I should go into my, okay. Okay, thanks. So basically not a lot of people, so I'm going to go and start from, I went to school in the United States. In early 2000, I came to Russia, aspiring to be an investment banker. It was my lifelong dream to one day become an investment banker. But at the time in Russia, it was absolutely impossible to become a banker right out of college because you had to have experience. There were no investment banks. There were very few international banks working in Russia. So I decided to become an accountant. So for 2 years, I worked at PwC. And after 2 years, I was presented a chance to have an interview at JP Morgan Chase at the time in the Moscow office. So in 2004, my career in investment banking started as an analyst at JP Morgan in debt capital markets, DCM origination. I spent 6 years doing capital markets at JP Morgan, and then Goldman Sachs made me an offer, which, as the movie Godfather you saw, I couldn't refuse. So the next few years I spent as head of financing group for Russia and CE at JP Morgan in Moscow. Pretty much my entire career I moved between Moscow and London. So I spent quite some time in London with clients and with the deals. In 2014, when there was a crisis with Ukraine, and it was evident that international banks in Russia could no longer do some of the more interesting things that they have done previously, and the job was not as interesting and challenging and exciting as it was previously, I decided to go and work for one of the Russian banks, which at the time presented an amazing opportunity to build out a very interesting business of structured products, commodities, and derivatives at Sberbank. So for the next 3 years, I spent working and building a business at Sberbank. At the time, our team of 15 people ran a business which netted north of $300 million a year in revenue. So as you may imagine, huge business. Nothing compared to what international banks were making at the time in Russia. But after a few years of working at Sberbank, I realized that maybe Sberbank is not the type of place for me, because some of the qualities that have helped me develop my career at Goldman and at JP Morgan were not necessarily the ones that people were looking at Sberbank. So I was getting close to being about 35 years old, and I decided that the experience that I had on the sell side, how many of you know what is sell side and what is buy side? It's the same people that know who I am that raise their hands. So basically, sell side is when you're trying to sell something to a client. You sell a product, an instrument, Buy side is when you have money and you basically sit and wait until everybody comes to you and you make a decision whether you want to invest or not. So banks are typically sell side. Funds that manage investors' money are buy side. So 5 years ago, I decided that it was time for a change. Banking to me was something that I knew very well and I've done for many, many years. And I decided to look for an opportunity to become a buy-side fund manager. So for the next 4 years, I worked at a UK-based hedge fund called Gemcorp Capital. We concentrated primarily on investing our investors' money in emerging markets in Africa, in Central and Eastern Europe, in Russia. And finally, after a few years working as a partner at Gemcorp Capital, I decided that it was time. I was close to turning 40. I had 20 years of finance experience to actually try to do something of my own. So last year, together with a few partners, we have started our own finance company, which has two strategies. The first strategy is asset management for wealthy individuals, and the second one is private equity and special situation deals. How many of you know what is private equity? I know those guys are going to raise their hand. How many of you know what is private equity? How many of you don't know what is private equity? How many of you will not raise your hand irrespective of what I ask? Okay, well, at least you're fair. At least you're honest. Or maybe she just didn't understand what I asked. And she just... Anyway, so that's in a nutshell my career path. I know that some of you had some questions that were sent ahead of our meeting. Some of them were about interest rates. Some of them were about capital markets. I would much prefer to kind of have a live discussion as opposed to just me talking about things that I feel are interesting. So if any of you have questions, right now is the... Go ahead.
Hi, so my name is Wally, and I'm a third-year student here at LSE. So since you've had experience working both in Russia and here in the UK, so how would you compare working culture in both countries?
The working culture did not change based on whether I worked in London or in Moscow. It changed whether I worked, for example, at JP Morgan or at Goldman more than it did because basically you work in an environment which your employer creates. There's a certain kind of internal rules and the environment that is peculiar to one bank as opposed to the other one. But maybe your question refers more to the clients or the career.
To rephrase what I asked, so let's say Goldman Sachs. So is it different working in Goldman Sachs in Moscow or in London? Like, or is the culture the same in both countries?
There's absolutely no difference whether you work at Goldman in Moscow, in London, or in New York, because the culture is the same. You have U.S. partners running the Moscow office, basically disseminating the culture, the same culture that they have picked up and that they're used to by working for many years at different offices. So I can say that my Goldman experience was that I was amazed by how uniform the culture and the decision-making process has been, irrespective of whether you're working in the Moscow office, in New York, or in London. I mean, obviously, people in New York feel like they are the real Goldman. People in London feel like they're like also the next layer. And obviously, the satellite offices, which are smaller, feel like, they're like the redheaded stepchild. But in a sense, when you have a committee, you are paid as, for example, head of the Moscow office to have an opinion of what the firm should do based on the culture and the values of the firm. And irrespective of whether you were working in Moscow or in London, you were considered an employee of the firm, bearing the values of the firm. This is why, short answer to your question is that there's, the difference was basically, I didn't feel it. Burning passion and desire to one day become an investment banker. Because ever since I went to college, I knew that investment banking was an industry where I wanted to end up. I mean, it possessed all the things which I felt suited my character. You know, there's a lot of competition. Clearly, you need to know how to work with people. You need to sharpen your talents, your skills, and you have to be able to work in a team. So for me, it was a challenge, and I built up a plan to get to a point where I would be considered by my experience and myself would be considered by an investment bank. So I knew that I couldn't get to investment banking immediately because in Russia at the time, basically nobody hired people without experience. So I went and decided to be an auditor for a few years. Then I kept on applying to different banks, sending out resumes and cover letters saying that I really want to join you guys. And eventually I was lucky enough that I was just telling David before I came here that a friend of mine had his wife who worked as a headhunter at Morgan Hunt, and he said, "Why don't you give me a resume? Maybe they'll invite you to an interview." And I was lucky enough that 2 months later they invited me to an interview. I came. I was nervous as hell. I was sweating, and I remember this little guy, balding, middle-aged guy, Bob Fernandez, my future boss, who was interviewing me, and I guess it was a combination of luck and chance, because his wife went to a university which was right across from the one that I went to. So when we kind of uncovered that fact, immediately we kind of bonded, and he knew that he could trust me. So it was a combination of things, but that's how I got my chance. I came to London. I was like, I'm 25 years old, flying business class to London, center of the world. I mean, what am I doing here? Am I dreaming? I was pitching myself. But basically, at that time, my dream came through. And the rest was basically up to me. I had to kind of write my own success story by being tenacious and, trying to aspire the best banking professional that I could be. So it was a combination of chance and luck. But as they say, there's a saying, chance favors prepared minds. So if you're prepared and you see a chance, you need to grab it. But one thing I can tell you for sure, you have to know what you want from life. You have to know what you want. Because if you know that you want to become an investment banker, or maybe some of you want to become private equity specialists or consultants, or maybe auditors, you have to know what you have to do, what kind of steps you have to take in order to increase your chances to get there.
Can I just rephrase my question? It was all helpful. And to what extent your accountancy background helped you to become an investment banker? Did you use any of your experience?
What accounting taught me was two things, very important things. First was the corporate finance. You need to understand how corporate finance work in order to become an investment banker, basically. And that gave a lot of experience, hands-on experience of working with companies, looking at financial statements, doing audits, understanding how businesses work. So that's point number one. Point number two is when you're an auditor and you are sent somewhere to the Urals to audit a firm, and you come into the accounting department, and Galina Nikolaevna doesn't want to see you there, and share any information with you, you need to find a way how you get her to share that information with you, right? So that teaches you people skills, which are absolutely vital to a success as an investment banker. So I think accounting gave me an amazing school that gave me those the experience and the knowledge to use further in my career. I mean, 3-0, guys. They're winning. Okay, all right. You're next. I got you.
I would like to ask how your life changed after starting your own thing.
Well, I can tell you a story. After 6 years at JP Morgan, right, I was kind of bored. Things were really not as exciting as they were the first few years. I decided to take up Goldman on their offer, so I took them up. I came to Goldman, and I was like my first day on the job. I realized that actually not a lot of people were waiting for me at Goldman, and most of the people were asking me, "Wait a minute, what are you going to do again? Who hired you?" So, as you know, there's a public side and there's a private side in banking. How many of you know what is the difference between public and private side in banking? What do they get? Again, the same two people. Basically, there's a private side businesses like M&A, advisory. And those are the people that get all the material non-public information from clients. They're not allowed to trade. And public side is all the markets activities, global markets, sales, trading, etc. So the head of the office was from the public side. He hired me into the private side. So when I came, I realized that actually I couldn't even speak to him. And all the people on the private side were like, "Who are you?" So I remember I locked myself in the bathroom the first day that I came to Goldman, understanding what have I done. And it was super challenging at the time just to kind of realize that actually you have to start from the bottom, from scratch. You have to go out there and tell and make a name for yourself. So all the years at JP Morgan, the 6 years of building up equity capital for myself that I could have used there, basically were nullified when I came to Goldman. So that was a difficult period of my time, of my life. When I joined public side, when I joined the fund business, it was also new because I've never done this before. And when in the summer of last year I decided to go and pursue my personal endeavor, my personal firm, I mean, for the first few months it was like, wait a minute, what am I doing? I've never done this before. For 20 years of my life, I always had somebody behind me, a big organization, JP Morgan, Goldman Sachs, Sberbank. And for the first time in my life, I was all by myself, all alone. So to me, that was an enormous challenge, the one that I had to kind of get comfortable with. So the point I'm trying to make is that irrespective of whether you have 20 years, 30 years, or 5 years of experience, life always, as long as you're advancing, life will always throw situations at you where you have to reinvent yourself, when you have to actually step out of your comfort zone. Excuse me for, I know that this term gets thrown out a lot, but actually that's the case. So if this answers your question, it does?
Hi. So my question is related to coronavirus.
If you guys can just say, when you ask a question, just say your name, because I don't know.
Sure, Salim.
Salim,
if you want. So yeah, my question is related to coronavirus. Most of us probably know the effect of coronavirus to financial market, is that Dow Jones index went down, and some stock prices also went down. So what are your future predictions regarding coronavirus, and how can we get advantage with respect to financial perspective from it?
Well, it's easy. It's very difficult to make those kinds of predictions. But if you look at the kind of factual sequence of events, what we have right now is a massive supply chain disruption, which will inevitably lead to lower earnings for companies. Lower earnings for companies will inevitably lead to lower multiples. So if I was a betting man, I would probably bet that we haven't seen the worst of it. It's going to get much worse before it's going to start getting better. Because what is happening? You have the entire world running at full capacity, right? And then all of a sudden, the entire system breaks. And you have all those commodities sitting on tankers in the oceans that need to be sold. And the only way to sell the stuff is to sell it at any price, at any offer, at any bid that you can get. So the commodity price will go down. Corporate profits will definitely decrease. Most likely we're going to see bankruptcies, meaning that banks will try to call on collateral. So we're going to see the whole kind of, the entire chain of events to cleanse the system. So this is why I'm saying that it most likely is going to get worse before it gets better, because we haven't seen kind of the panic selling, we haven't seen the liquidations, we haven't seen the bankruptcies. But most likely because of what we're seeing now, again, if I was a betting man, I would say that we haven't seen the worst real economy implications of the crisis of the confidence crisis that coronavirus has caused globally. So short S&P, you'll be fine. Do you guys know what shorting is? No? I know you guys know, but maybe some. But what do you study here? No, business and finance. Okay. Yeah, sure, absolutely. If I did use some lingo or language that you guys didn't understand, I apologize, because I was not sure how deep is your knowledge of finance. But when you sell something short, it means that you're making a bet that the asset price will go down. When you buy something long, it means that you are betting or you're putting your money on asset appreciation. So, for example, if you have a view, if you have a conviction that the global economy is not going to do that well and that asset prices will go down, you make a bet, you short a stock or an index, basically you sell it today, but you want to buy it at a lower price in the future and return the stock that you have borrowed. So in a few words, that's how shorting works. Long, it means that if you want to buy, for example, you believe that shares of Apple will increase, you buy shares of Apple, hoping that in a year, 2 years, whatever time down the line, the shares are going to be more, you're going to sell them at a profit. But if you think that the shares of Apple actually are going to tank, then you sell them short. So it's basically a directional play exercising your view on the asset price. I don't know, probably made it even more complicated for you. And going back to your first question, I mean, I can speak to the transformation of finance, but I thought that for most people, it would be more productive and more interesting to get answers to some of the questions that you had. I can do either way. Honestly, I did speak to David before, and I understand that in UK right now, the transformation of finance is probably more important to people who are trying to figure out what to do with their life, where to get a job. But the market in UK is so buoyant, especially for people who go to top universities, that you all are pretty much guaranteed to have a decent job, a decent internship, and a decent career in banking, finance, accounting, consultancy. So I decided not to speak less about this. Maybe I can make sure that I don't draw somewhere I'm not supposed to. Where can I do this? Here? It's fine. Okay. Make sure Marco doesn't kill me. So, it's the same?
But if you draw it on the glass, on the wall.
Okay.
Yeah.
So, if you want to sell 100 shares of Apple short, you come to me and you say, can I borrow 100 shares of Apple from you, Albert? I said, okay. So you borrow 100 shares of Apple, you immediately sell them at let's say just for argument's sake, at 1,000. You pocket this 1,000. A year later, the share is worth 10. You go to the market, you buy it, you pay 100. And you return the shares back to me. I still have my shares, but you have pocketed $900 of profit because the shares have fallen in price. That's called short selling. And you can do the same thing with equities, with indexes, with any asset that you want to make a bet will lose in its price. So that's why I said if you want to express the view that we haven't seen the worst yet, and you think we're going to go lower, and you want to make money, then you can short the equities or the indexes.
What about if you short a company, but it goes bankrupt, like Lehman Brothers? They go bankrupt and delisted and go to administration. How do you make profit on that time? You lose it?
Well, to be honest with you, if you, I'm pretty sure that there's a bankruptcy proceeding. There's a pool of assets that Lehman had, even though it was bankrupt. And from that bankruptcy proceeding, you are going to get something. So you're probably not going to lose your entire investment.
Yes, because if I borrow 100 shares of Lehman Brothers, let's say, at this time, and after 1 month they got delisted, bankrupted, and if they give me something, I give it back to the person whom I bought.
Basically, if you buy shares of Lehman Brothers, right, and the company goes bankrupt, and you haven't given those shares back, it's difficult to say, but I actually think that the guy who you borrowed the shares from, he's the one who's not going to get anything, because you keep the premium that you receive from selling the shares in the beginning. Wow. I see we're warming up, guys. Good. Okay. So, It's a very good question, but there's no simple answer because everything depends on your risk tolerance and on, for example, if you go to a private bank and you say, guys, I have $100 million and I want to get 6% return on my portfolio. They will put together a combination of stocks, bonds, maybe some real estate, maybe some hedge funds that will get you to the desired yield percentage. You go to them and say, actually, I want 10%. They will restructure the portfolio, and they will probably put more equities in there, maybe more hedge funds. So it all depends on what you're trying to achieve, what kind of yield you're trying to achieve on your investments. What we see in the assets that we manage, mostly people want to retain their capital because it's a very unpredictable environment right now. So mostly people invest into bonds when they want to retain and sustain their capital. When they want to grow their capital, then they look at other asset classes, which are more yieldy, but at the same time bear more risk. So, for example, right now, if you're heavily invested in bonds, you probably didn't do that bad as if you were overweight in equities, because equities took the biggest hit since the beginning of the year.
Do you mean government bonds or some other bonds?
Well, bonds, it could be government bonds, it could be corporate bonds. Yes, this is why right now we see the flight of quality into U.S. Treasuries. And this is why the 10-year Treasury is yielding like 1%. Because when, as they say, something hits the fan and investors don't know what to do, they pile up their money, they sell all the risky assets, and then they invest into the safest assets that are out there. Who knows what is the safest asset to be invested in? Well, which government? U.S. This is why most of the money right now is leaving the riskier assets and going to U.S. dollar and to U.S. Treasuries. When situation stabilizes, as we've seen eventually happening after every crisis, U.S. dollar sells off, people start selling, investors are starting to sell treasuries and going into a more riskier but yieldier assets.
So what's the yield average now? The one that would protect the assets?
What's the what?
The yield percentage.
In the market,
At the moment, yeah.
at the moment, the benchmark risk-free rate is considered to be a yield on the U.S. Treasury bonds. And the yield on U.S. Treasury bonds is different based on what maturity of the bond you want to invest in. So if you really want to keep your money safe, you invest it into the government securities. For example, what do we see in Europe? The bond. Do you know that in Europe there's negative interest rate environment? So for most of the investors, they want to keep their money in euro and they want to keep it safe and liquid. They actually have to pay a little bit as opposed to receive.
So what I'm saying is, the question was like a private person who comes to your company, and so what's the expectation if the person is risk averse, let's say, risk appetite is just to protect the assets. So what would be the percentage at the moment, the target percentage that he can expect possibly, like 1%, 2%, just an idea?
It's very difficult to say exactly because
just average, like 10%, is it possible?
it's absolutely possible. Yes, it's less safe than 1%, and it's significantly more risk if you go down the kind of on the there's a rating that rating agencies give to a fixed income instrument. So the AAA rating is the rating that is given to U.S. Treasuries, for example. But some of the yieldier assets, maybe emerging market bonds, some LSE bonds, they get a lower rating but a higher return. So based on your risk tolerance, you can put together a portfolio. For example, the average return in our book since 2014 has been 10.5%. Fairly stable because we invest into emerging markets. But there's a lot of investors who do not want to get exposure to emerging markets. They want to be sure that their money is safe with the government securities of the G7 nations. And obviously those investors are going to get significantly less return. That return can be in the span of kind of 1 to 2, 3%. Let me get the question from my biggest fan tonight. That one was in Russian, right? Yeah. Okay, good. It's a very good question, and that actually goes back to somebody asked whether I was going to speak about the transformation of the finance industry. Yes, right now what we're seeing is kind of a secular change in the industry. There's a migration of workforce in banking that has started with commercial banking, meaning that more mundane, repetitive jobs will go to the machine learning, to the AI. It is estimated that in the United States alone, about 1.3 million jobs of banking professionals will be obsolete and will be replaced by the machines. But on the bright side, the human creativity, leadership, communication skills, those things will, for the foreseeable future, allow us to secure interesting finance-related jobs. Investment banking, M&A advisory, is the area which still will be dominated by humans, so to say, and in my opinion, there is definitely, in the foreseeable future, and this is the industry where you can make a very good career, especially in the United States. In Europe as well, probably slightly. The market here is not as buoyant as it is in the United States, the M&A and advisory market, but still, if I was to advise somebody on a career path, and M&A and corporate finance was your thing, I'd say stick to it. My personal opinion was that the Fed rate cut was one of the kind of populist measures that the Trump administration has forced the Fed to make in the same way as they have done for the last few years, just to calm the markets. But in a sense, we've seen that it didn't do absolutely anything for the market, because what happens when the Fed lowers the rates? Just simple answer. What happens? When the Federal Reserve cuts interest rates, what happens to the global kind of money supply? More money supply. Basically, there's more money to be kind of distributed between the market participants. More money. But the issue with coronavirus is not that there's like lack of money. The issue is that people have stopped traveling. People have stopped trusting each other. China has stopped producing stuff. I mean, I was shown a picture of mainland China, of the pollution map between before coronavirus and now, and basically there's no pollution because the factories have stopped. The factors, so there's a significant supply chain disruption, which is going to lead to, irrespective of how much money, how much helicopter money you throw at the economy, it doesn't solve the issue. So that rate hike, in my opinion, was a bit, it was a move just to calm the markets, to make sure that kind of, the party continues and the investors are happy. But in a sense, it just took away one more option for the Fed to react in the future if it comes to it. Yes?
Hi, my name is Melania. I'm studying economics here. So my question is simple, but not really simple. So in your personal opinion, what can be the next reason for financial crisis?
The next, we haven't dealt with this one yet. Melania, a beautiful name. This is the name of my niece. Her name is Melania as well. I can't answer this question because right now we are, safe to say, on the verge of something that can potentially be fairly devastating to the global economy. Depending on where we end up after this potential situation, one can only guess. But unfortunately, I cannot predict what's going to happen 5, 10 years from now. Yes? Because I started sweating with all the technical questions. Give me some real life questions.
Let's sound a little provocative, so please don't take it personally. So you mentioned that you always aspired to be an investment banker. And here at LSE, we also have the culture of people being obsessed about investment banking, asset management. And people just want to be an investment banker because it just sounds fancy. And did it also apply to you? And have you ever had a moment when you realized that you brought something that you expected?
It's an amazing question, right? I'm gonna answer it with great pleasure. You guys have to wake up from the kind of mystique and mystery of investment banking as you've seen in books or in movies. That stuff is never coming back. You're never going to be. Basically, when I was your age, when I was 20 years old, aspiring to become a banker, at 25 years old, I was making more money in a year than my father was in his lifetime. And that wasn't right. Right now, what we see is gradual decrease in, well, actually, a very fast decrease in the amount of money the bankers can make. Because 10 years, 15 years ago, 20 years ago, people were encouraged to take risk because their compensation was based on the amount of money they would make for the firm. That resulted in the crisis of 2008, when there was excessive risk-taking by the banks, basically taking money from the depositors, investing it in CDOs and other structured instruments, which eventually blew up. So now there's a lot of regulation, and you see a lot of star investment bankers setting up their own funds because this is the only way for them to continue making the same kind of deals and money that they're used to. So I was obviously lured with the whole aura of investment banking, right? You see in the movies and stuff. Some of it is true, but in my opinion, that thing is going to stay in the books and the movies. We're not going to see this ever again.
We're glad we go to that point, and that point I think we need to finish, right? Thank you very much.
Thank you, guys. Thank you. Can I ask you guys to take a picture if silence? Not only with David, but with all of you, maybe. It would give me great pleasure. Huh? It doesn't matter. Okay, thank you very much. Was it good?
Yeah, very good.
Thanks. Давайте мы сыграем, потом я еще останусь и на все вопросы отвечу.
Vasily, thanks for covering last week your turn. Now we understand everything.
Потому что ты все-таки пришел на лекцию, такие же вопросы по capital markets, потому что, ну, что если
Хорошо, как зовут? Никит, да, и сейчас сделаем, а потом я тебе отвечу.
да, можно
Как, куда, сюда?
деривативы. Там то же самое. Long forward, short forward.
Спасибо за вопрос, очень приятно. Здравствуйте. Они сами встанут? Ну, я, видишь, как не знал, насколько люди подкованные. Мы все попадем в кадр? Мишка. Спасибо. Да, спасибо. Надеюсь, было полезно.
Интересно, да.
Он такой, есть лидеры, которые просто...
Итак, у нас сейчас будет следующее выступление.
Я тебе объясню сейчас.
Because we are ready to announce the next speaker.
Те 5, которые не проваливаются, они реально делают огромные деньги. Это очень...
Для чего